Welcome. In this video, Xcn coin made a flag formation. Is bullish coming? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand. When the chart is examined carefully, one of the important and reliable formations in technical analysis, the flag pattern, stands out. This formation typically represents a short-term consolidation period following a strong upward move and can signal the beginning of a new bullish wave. The current market structure closely resembles this formation. Specifically, after a sharp upward move, the price has started to move within a narrow range for a while, and this horizontal tight appearance resembles a classic flag pattern. Flag formations are often considered strong indicators of trend continuation in technical analysis. The core philosophy of this structure is that the price temporarily pauses to gather momentum, then releases this energy with an upward breakout. From this perspective, the current price action presents a highly positive outlook in the broader picture. Based on the structure, it is expected that the price will eventually break above the upper band, i.e. the resistance line, of this narrowing formation. If this breakout occurs, the market is likely to enter a new bullish phase. Within these types of formations, price usually moves sideways in a compressed structure for some time before breaking out sharply and strongly to the upside. When such a breakout occurs, it typically gains momentum equal to the previous upward leg. This means that if the price successfully breaks above the upper boundary of the flag, we could potentially see a move equal to or even greater than the previous rally. Technically, this aligns perfectly with the measured move method used to set targets based on the pattern. One of the strongest aspects of flag formations is that they follow a period of controlled consolidation rather than a deep correction. This makes the continuation of the trend more reliable. The fact that the price is currently inside a flag formation indicates that buyers have not completely exited the market. They are merely in a preparation phase. Such patterns are often seen as periods when large funds or institutional investors are waiting for the right moment to enter the market. When the formation completes and a breakout occurs, these players often buy heavily and accelerate the trend. During the formation of a flag pattern, trading volume usually declines because market participants shift into a waiting mode. However, at the moment of breakout, this reverses, and a noticeable increase in volume is observed. The currently observed low volume reflects a typical characteristic of this formation. If the price reaches the upper band and breaks it, a strong increase in volume is also likely. This suggests that the upward move will not only be a technical breakout, but also supported by significant momentum. Flag formations also reflect market psychology. While early investors take profits after the initial rally, new investors look for entry opportunities. This transition phase forms the body of the flag. The price becomes compressed but maintains its direction. Market participants closely watch the upper boundary of the formation, knowing that a breakout could trigger significant new buying. In the current price structure, a similar psychological balance is evident. Although the price has touched the upper band, major players have not yet acted. But with an upward breakout of the formation, they are expected to step in. But we cannot base our analysis solely on the pattern. Let's take a look at other metrics as well. Stay tuned. When the chart is examined carefully, it is observed that the price is currently positioned just below a significant resistance level. This resistance zone has been tested numerous times in the past, each time acting as a strong barrier that pushed the price downward. However, considering the current market structure and price behavior, the probability of this level being broken is gradually increasing. In particular, the fact that the price is forming higher lows with each approach to this level, along with a noticeable increase in volume, indicates that this resistance is weakening and preparing for a breakout. There's a commonly used phrase in technical analysis: the more a level is tested, the more likely it is to break. At this point, the price has tested this strong resistance multiple times, which could signal an imminent bullish breakout. This resistance level should not be considered just as a horizontal line. It is also a key indicator of investor psychology. This is an area where many traders previously took profits or exited losing positions. However, once a close occurs above this level, the selling pressure can diminish significantly, allowing buyers to take full control. Such scenarios often trigger what is known in the market as a short squeeze. In other words, when the price breaks through the resistance level, investors who opened short positions below this level may rush to cover their losses by closing their positions. This adds extra buying pressure, causing the price to rise even more rapidly. The persistence of the price near this resistance level shows that there is significant buying power in the market. As the price continues to challenge this level, sellers begin to weaken and buyers become dominant. When this balance tips in favor of the buyers, the resistance becomes unsustainable, and the price can break through, gaining upward momentum as if unleashed. These types of breakouts are usually sharp and occur with high volume because technical traders, algorithms, and large investors enter the market with triggered buy orders at these levels. This leads to sudden and strong upward movements, commonly referred to as a pump, especially when examining past examples of rallies that began with similar resistance breakouts. It's clear that such moves often lead not only to short-term gains, but also to the start of new trends. In the current scenario, the price's proximity to this resistance and the ongoing consolidation suggest that the market is at a major decision point. A significant portion of investors are waiting for this level to be breached and are preparing to treat the breakout as a new buying opportunity. Additionally, this resistance level can be seen not only as a technical barrier, but also as a psychological one. Many investors view a break above this level as confirmation that the market has entered a safe zone, which boosts confidence and encourages buying. As a result, not only technical traders but also emotionally driven retail investors are likely to jump into the market upon a breakout. This contributes to increased volume and a faster upward price movement. For investors, such resistance levels offer major opportunities. When these levels are broken, the market often experiences sharp directional changes, trend reversals, or accelerations in existing trends. Typically, a short-term retest follows the breakout, during which the broken resistance turns into a new support level, forming a solid foundation for trend continuation. Even if the price returns to this level after the breakout, it should not be seen as a sell signal, but rather as a buying opportunity. The Vortex indicator is a highly effective technical analysis tool for analyzing the direction and strength of the trend in the market. Looking carefully at the signals given by this indicator on the current chart, we can see that the red line is positioned above the blue line. Although this indicates that selling pressure is more dominant in the short term, it is also clearly felt that the market dynamics are gradually changing and the buy side is getting stronger. This is because the momentum in price movements and other technical data are giving positive signals that the strengthening of the buying side may start at any moment. On the Vortex indicator, the blue line represents buyer pressure and the red line represents seller pressure. Crossovers between these two lines usually signal strong trend reversals. In the current situation, the blue line is approaching the red line and climbing up at an increasingly steeper slope. This indicates that buying power is recovering rapidly and energy is building up to give the market a new impetus. If the blue line manages to cross the red line to the upside, it usually means that a strong and sustained uptrend has begun in the market. This kind of crossover is not just a technical detail, it also represents a major shift in market psychology, because at this point, buyers start to dominate the market and sellers retreat. This makes it easier for the price to move upwards. Vortex shows us the trends. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.